Welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The US economy is starting to show signs of exhaustion, just as the Chinese economy looks like it can't actually transition to one where internal demand replaces their industrial exports engine, as they were planning. But locally this week, it'll be all about how July retail sales turned out and an update of our June population. And there'll be a rush of earnings reports out this week from listed companies locally. In Australia, we'll get their July labour market update with both the August Westpac Consumer Confidence Survey results along with an update of inflation expectations. Globally, the ongoing standstill between Iran and the US should continue to dictate energy prices and influence global interest rates. Rates will also take the spotlight with minutes from the last divisive meeting of the Federal Reserve, which included 3 dissenters. More US data is expected to confirm their slowing economy. In Japan, there'll be a raft of data updates for the world's 4th largest economy, including for GDP, exports, inflation, machinery orders, and flash PMI data. Indonesia and Sweden will review policy rates and settings this week. In China, July data releases this week will include industrial production, retail sales, house prices, fixed asset investment, and their unemployment rate. The People's Bank of China is also widely expected to leave its 1- and 5-year loan prime rates unchanged at 3% and 3.5% respectively. This will come even though they have surprised with their bank lending actually contracting in July. Only the 3rd time ever this has happened, and by far the largest retreat. Net new yuan loans fell by 340 billion yuan in July, when a week no change was expected, actually a minor 45 billion yuan increase. July is often the lowest month for new bank lending, but this latest data represents some real weaknesses. A slowing economy and poor consumer sentiment, particularly for housing, limited demand for loans. About 460 billion yuan of this fall was for consumer debt. But the swing also reflects the downturn for the traditional business sectors of the economy. Their tech sector commonly raises cash in the bond market instead of bank loans. So within this result, there may be evidence of a structural shift. And Taiwan said its economic activity came in 12.9% higher in the second quarter of 2026 from a year ago, lower than the 15.4% rise in the first quarter. This was still the second best growth pace, however, that they have recorded in almost 50 years. Malaysia said its economic activity expanded by 6% in the second quarter of 2026, a rise from 5.4% in the first quarter, and better than the expected 5.7%. In India, the bank lending impulse there has the taps fully open, with lending up more than 19% at the end of July from the same point a year ago. This is a new modern record rise, and to record levels. Across the Pacific, US retail sales took an unexpected dip in July from June. They fell 0.6% on that basis when a 0.1% rise to complement June's rise was expected. This is a big miss and was the first decline since October 2025 and the largest in over a year. Weaker sales at online retailers, car dealers, petrol stations and electronics stores shifted the needle, so it was a broad-based dip. From a year ago, these July sales were still up 5.2% from earlier gains. Also dipping was US consumer sentiment, but this is for August, so the dour mood is extending. The widely watched University of Michigan survey came in back at levels that followed the US attacks on Iran, so the July rise was an anomaly. A small easing was expected, but not one this big. Year-ahead inflation expectations from this survey ticked up from 4.2% in July to 4.3% this month. Inflation and inflation expectations are key to the Fed. The new boss, Kevin Warsh, may not want to talk about the elevated threats, but other regional governors are, some who vote. The Atlanta Fed's boss isn't one of those, but she says inflation is too high and risks staying like that and embedding unless the Middle East situation resolves quickly. The Chicago Fed's boss is worried too. Current CPI is 3.4% officially, but the Cleveland Fed nowcast for PCE measures of inflation, and their latest update has it at over 3.7%. These levels are a long way from the mandated 2% policy rate, and Walsh is likely to get outvoted when they next meet in mid-September. Financial markets currently price in 1 chance in 3 of a 25 basis points rise then. And for the record, current US petrol prices are now 5.7% higher than month-ago levels. Diesel is 11% higher on that same basis. Their inflation threat is not receding. Meanwhile, the EU reported that second quarter 2026 economic activity rose 0.4% in the euro area and up 0.5% in the overall EU compared with the previous quarter, and was up 1% and 1.2% respectively from a year ago. So recent activity is picking up, although in a way that was broadly anticipated. The US Treasury 10-year yield is now just on 4.70%, up 1 basis point from this time Saturday, up 5 basis points for the week. And the price of gold is stable, now at $4,376 an ounce, up just $2 from Saturday, up $39 from this time last week. Silver is held at just over $64.50 an ounce, up $1 for the week. And oil prices are unchanged from Saturday at just under $82.50 a barrel in the US, while the international Brent price is now just on $88.50 a barrel. A week ago, these prices were $78 and $83.50 a barrel, respectively, so a 6% weekly rise. And the Kiwi dollar is little changed from Saturday at just under 58.9 US cents and unchanged for the week. Against the Aussie, we're holding at 83.2 Australian cents. Against the euro, we're still at 50.9 euro cents. That all means our trade weighted index starts today at just over 62.5, unchanged from this time Saturday and very similar to a week ago. And the Bitcoin price starts today at $63,102 and up 0.4% from this time Saturday, down 2.6% for the week though. Volatility over the past 24 hours has been very low at just on plus or minus 0.3%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora. I'm David Chaston, and we'll do this again tomorrow.